I'm so excited to finally get to share this with you guys. So for the last year, I have been working closely with HUD and FHA to roll out a new mortgage program that is not only going to allow you to close more loans, get more referrals, but also provide insane value to your clients and carve out a niche in the market that is completely vacant for you to dominate. What I'm talking about is a new EcoSmart FHA mortgage loan that can be used both for purchases and for refinances. Now, what you have to understand is we have an aging housing population. We have about 50% of homes in America that are over 40 years old, and this is combined with the fact that electric rates have been skyrocketing. We've seen electric rates go up as much as 500% in the last 10 years in some markets. And what we need to realize is a homeowner, when they're buying a house, not only are they taking on a mortgage payment of principal, interest, taxes, insurance, and all of that, but they also are dealing with rising inflation costs of those home ownership costs. For an example, an electric bill. So why this program is going to be so key is I want to walk you through a real life example. Now, what this program is allowing you to do is when somebody uses an FHA loan to purchase a home, you are able to take up to 20% of the purchase price of that property. So say we have a home that's $500,000, and let's say we want to use $50,000 to renovate and modify and modernize this home. What you can use on this program is you can add solar panels, you can add storage, you can put a new roof on the property, and you can make this property a smart home with energy efficient upgrades. What the best part is let's say you spent $50,000. Now they have to buy that house at $500,000. They only need to put 3.5% down based on that $500,000, and they can roll in all $50,000 of those upgrades into their loan, exceeding 100% loan to value, not increasing their down payment. And by doing this, they're adding value to their home and they're eliminating their electric bill in many cases. So for an example, on this home that we were dealing with in Southern California, the property of a $550,000 FHA loan, putting a normal 3.5% down, was going to give them a total principal, interest, taxes, insurance, and PMI payment of about $4,100 a month. But what this home has an electric bill of $466 a month. How do we know that? We built technology. With one click of a button, we can tell exactly what the electric bills have been on that home for the last 12 months. And that electric bill is $466 a month. So this homeowner, between their principal, interest, taxes, insurance, and electric bill, would be paying in the neighborhood range of $4,700 a month. Now, if they wanted to look at a conventional loan and put 5% down, we all know conventional loans are higher than FHA loans, that would give them a payment with the principal, interest, tax, insurance, and PMI payment, factoring in that same $466 a month for their electric bill of about $200 a month higher than the 3.5% down FHA loan, which is why more people are using FHA. Now introduce EcoSmart. I take that same $550,000 in a purchase price, and I'm now able to put solar panels on this home, fix the roof that needed to be fixed, go ahead and roll that into the mortgage loan for $40,000. Now, yes, my principal and interest and tax insurance payment goes up by about $200 a month compared to the standard FHA loan because I'm borrowing more money. But now what I don't have to do is I'm not increasing my down payment. And the best part is the home doesn't have to appraise for the $550,000 purchase price plus the $40,000 in upgrades. No, it just needs to appraise for whatever the purchase price is. There's no value that needs to be given on the appraisal for adding in these upgrades. Now, even though my principal, interest, taxes, insurance, and PMI payment is about $200 a month higher because I'm rolling in $40,000, guess what I just eliminated? The electric bill of $466 a month. So now my homeowner, their principal, interest, taxes, insurance, PMI, and energy bill payment is $266 a month less than the FHA option, saving that homeowner $3,000 a year. And wait, it gets way better because I haven't even told you the best part. What we can do is by going and doing these energy efficient upgrades, the solar, any of the things that we put together in this package, whatever the total cost is, in this case, let's call it $40,000, that homeowner gets a reduction in their year one IRS tax bill payment of $13,000. Where'd that come from? Well, guess what? The new law that was passed federally called the Inflation Reduction Act is part of that. It gets 30% in a federal tax credit, not a write-off. A write-off means I just get to reduce my income. A tax credit is like having a voucher that if I owed 20 grand on my IRS tax bill, now I use that $13,000 voucher, I only have to pay 7 grand. And if I had $15,000 in withholdings, guess what? I'm getting an $8,000 refund. So now, by utilizing this program, not only am I saving money monthly, not only do I get to modernize my home, not only do I get to live in a more comfortable home, now I get a tax credit of $13,000. So if you look at it this way, if I put down $18,000 as my down payment on that 3.5% down FHA loan, I'm now getting $13,000 more to keep in my pocket by having that lower tax bill, or in essence, the net, I only really came out of pocket after I look at it from a year, once I file my tax, of about $5,000 for my down payment, because I got a $13,000 savings on my tax bill. And the best part about this FHA program is it doesn't delay escrow, because once the house closes, then we do the work. You don't need any value given to it on its appraisal. There's no difference in the interest rate between the two of them, and we do all the work for you. We actually are able to generate a home energy assessment report that you get to give to your buyer at the time of pre-approval, which specifically tells them what energy efficient upgrades to make on this home, tells them what the condition of their roof is, tells them what the electric bill will be on that home if they do nothing. It shows them all of that savings. Then that homeowner says, that sounds great. Guess what? You don't have to do any of the work. You have a dedicated energy advisor that you work with, that you simply introduce to your client. They get to design all of this with your client for you, get that what the total invoice would be, give it to you as part of your underwriting conditions. Then when everything closes, we do all the work on the roof, the solar panels, the battery, whatever we wanted to do on that. And not only if you're a loan officer, do you get paid for originating that loan, and now you originate a loan that nobody else has, you also get commission on the total package of what we put into that home on the solar. So for an example, if it's about a 10 kilowatt system, which is an average size system, let's say in California, you could be making $2,000, $3,000, $4,000 additional to your loan. And this is so different than the normal energy efficient mortgages that never got out, because those energy efficient mortgages only allowed you to roll in these items if the appraisal gave value to it. So in the case I talked about with a $550 purchase price rolling in 40 grand, the only way I could do this on an energy efficient mortgage was I had to get an appraisal for $590,000. Good luck trying to get an appraisal for $40,000 over the purchase price. On this new FHA program, which nobody has out, that we specifically worked with FHA to roll out, you only need that appraisal to match whatever your purchase price is. It can go over loan to value. Your clients are getting a tax credit. Your clients are saving money. Your clients are modernizing a home. You're closing more loans. You're getting more referrals, and you're actually not only improving the environment, you're improving your client's actual ability to own this home by reducing their biggest bill outside of their mortgage payment, which is their electric bill. So we are so excited to show you to this program, to give you access to it. And if you have any questions, we are here to answer them.